It's the weekly 30-30 trading list. We're finding the best momentum companies on the ASX and identifying those that are set to run. We're joined with Gary Glover from Novus Capital, who's picked out his favourites from the 30-30 list this week and is going to walk us through them. Good morning, Gary. How are you?
Good, Chris. How you going?
It's a long weekend in New South Wales, so the things are going to be looking pretty good for the weekend. And the market, we were hearing about dead cat bounces yesterday, short time rally, and then it's falling back. So a lot of volatility, but we want to be finding a lot of opportunity. So how'd you go this week with the momentum ones?
Yeah, look, it's we're sort of obviously we've been in a pretty nasty sort of bearish phase here. So we should be getting tougher and tougher to get sort of stocks in. I definitely think that's the case. So some of the winners here, sort of like a lot of the winners here, are sort of smaller ones. So probably not less market driven. Maybe just sort of So just notice a few. There's some interesting sort of stocks in the sector. There's definitely some stocks holding up here, which is pretty interesting. So definitely there's some interesting price action occurring there, which is giving us some leads here for what might be ahead. But let's so go to the quality momentum. So looking at the strongest sort of quality ones, there was the CAU Cronos Australia is obviously number one. So kind of a small stock here, but had a pretty good run there. The only thing I'll sort of say there is that there is like a little bit of a 5-wave formation in there, like a elite wave with sort of 1, 2, 3 complex, 4, then 5. So that's how often sort of elite wave sort of moves sort of finish. So, but the volume's been pretty good here, pretty healthy. So nothing sort of negative here yet. But it is sort of
high tight flag breakout from those last 2 days.
Yeah, a little bit there. So a little I like to see them a little bit last a bit longer there. But yeah, I mean, probably you might look a little triangle in there or something like that. Look, still looks okay. So the volume's pretty healthy. So but yeah, you just have to be a little cautious in the current market. Probably not overstay stuff here either as well. I think we sort of haven't seen a lot of stuff sort of following through and driving through. Number 2, there was LINs. This is a bit more measured here. Obviously, just I like this sort of, because obviously each sort of correction is kind of small, hasn't sort of really tipped over or overbalanced there. And Cogstate was the other one there, which has had a bit of a jump here. So some good volume through there. So look, it's a little bit messy stock here. It does get a bit gappy, so that makes it a bit tricky to trade there. So you'd probably want to sort of see some sort of consolidation there on that one there. Looking through the list there, obviously we've still got the coal stocks up there, so copying a bit of grief about that because obviously I don't like that Whitehaven there is forward-setting trend lines on our weekly, so I'm that everything I've learned about charts tells me to be very, very cautious there. So I'm just trying to tell people to be very cautious that one. And to be honest, all the feedback I've got and getting mocked on Twitter and stuff there for being bearish this stock, that's a red flag for me. It's just like that sort of like I post charts and have opinions on lots of stuff there, but I can't remember. It's been like 5 years since I've got the level of negativity or the feedback on a stock. So that tells me that so many people are invested or emotionally tied there. I mean, the thing about trading, Chris, is having an opinion doesn't really matter. Being right or wrong doesn't really matter. What really matters is how much you lose when you're wrong and how much you win when you're right. That's the only thing that matters about trading. So all healthy to have opinions here, but So I mean, I haven't even traded this one, so I might can't do options on it. So I don't short stocks. I like to do sort of options there, and it's a good way of sort of running my risk there normally. But even that, I don't do too many. I don't do too much on the option side there. I'd rather sort of short the market with a bearish ETF, which is something I was able to do yesterday with that bit of bounce there, sort of add to some of those shorts again. But those ones there, look, I still think they're up in the air, so pretty risky here to me. So I'd be cautious there. But please keep the mocking to the minimum. But the one that really is interesting to me actually is Tyro here. And I really don't like this sector here, but look how tight that price action is in there, considering how bearish this market has been. How tight is that price action there?
And the selling is just not coming through with much volume, is it? It's just kind of sitting tight.
Yeah. So it's it's just really, really tight in there. The volume's nice and light as well. So I just think that's that looks really encouraging there so far. So just of all the charts here, that's probably one that looks kind of the most interesting. So which kind of
if we
funny.
break that down for a second, the market's been falling and getting hit fairly hard, but this chart's barely budging. So what is that telling us as technical traders? What is that telling us is happening in this company?
Yeah, it just means obviously that the stock's been well supported here. So every time market's sort of going down, it's not really it's not moving much. So so I just think that's a good sign there. It's just basically sort of holding up here. So there's not a lot of selling going on as well. So obviously, if you want to sort of get out of, obviously the market's going down there, people are exiting stocks as well. You can generally sort of see the volume there. But I mean, this is pretty tight here. So the stocks remain really tight in the range here, setting on top of the previous high there. Volumes are starting to lighten off here. So it's pretty interesting there. It just means that people are, there's not too many people selling the stock, and the buyers are basically, are mopping up the stock, and any weakness there, it's just getting mopped up there above that sort of, what's that, sort of 123 level there. So pretty encouraging so far. So that's one of the more interesting sort of stocks out there. I think ASN was sort of one that's interesting. Again, this is thing. I guess this is probably a good example of the market here. This again is a sort of smaller stock here, having these pullbacks and then shooting up here. This is why I say be careful with some of those smalls that have gone crazy here. Just because they sort of once they peel off here, they can really cool off there. You can just sort of see them come back here. So I'd be careful that the amount of trades that I'm sort of seeing on here is a little lighter, and they're all the small sort of stuff here, which sort of easier to move the stocks up and then easier to come back down again. The only big ones I sort of saw here was sort of Premier Investments had a bit of a jump yesterday, so a bit of an upgrade. Special dividend companies trading pretty well. Seeing quite a few retailers here. So we had Premier Investments. What else was in there? Myer was in there. Lovisa was on our list as well. So
did notice Lovisa coming up for a few days. Yeah.
So Myer's been pretty robust as well, and Lovisa as well. So obviously that sector's been, it was beaten up pretty bad. Everyone was probably too bearish that sector, and then it's had a pretty good run and gone here. So look, that sector's probably a bit long in the tooth here now, but it definitely has sort of shown some resilience. Their retail figures are still pretty robust here, so everyone's thinking the worst, but the data is actually showing some strength there. And so even like Premier Investments was, their trading update was pretty positive, and even sort of really good strong figures here recently as well. So just sort of showing that although interest rates are sort of heading up here and everyone, market's getting a little scared here, people are still spending. So some pretty good signs there.
The consumer spending figures came out above expectations. I think some economists were saying, well, that's terrible for interest rates because that's more pressure on the RBA to put up rates. Is that kind of how that spending works in the cycle?
Yeah, it can do in that regard. So it's I think there's just look, I think it's just pretty interesting, all these sort of things going on. I mean, I think I just see the classic signs. Everyone's getting pretty bearish here, and then look, obviously there's some concerns there with interest rates does impact there, but I just know historically there when interest rates sort of do move up, generally the whole basis of interest rates moving up is generally the economy is reasonably stronger than anticipated, and that's why you lift rates up here. Obviously we've got inflation here, but the reality is the economy's been strong, and the central banks haven't lifted rates, so it's been stronger than everyone anticipated. So rates should be going higher anyway, even without inflation. It's just inflation's maybe quickening the process up, and maybe maybe causing them to go a little harder than they need to. But if all the inflationary measures start to cool off, which starting to see some signs of that, then maybe they won't have to go aggressively. But yeah, look, I mean, historically, I just sort of find when interest rates do go up, the market tends to get scared by when they see rates there. But then the reality as to why they've sort of gone up is it's usually because there's some strength in the economy, and then market normally absorbs the sort of shock of rates going higher, and then markets normally go up after that. So we just have a high inflationary environment here, which is that's the sort of scary aspect there, which is sort of more like the sort of 70s, which we haven't, I mean, that's 50 years ago, Chris. So it's a long time since we've had a really an inflationary concern about that, and that was a bit of a tricky time. So there's some concerns as to what might lay ahead there. AGY was sort of one that we mentioned there previously, had some pretty good volume there. So it's had a bit of a pullback here now. So just about sort of absorbing that. I don't like the fact that it's gone to a slight new high and then sort of failed there, but it has sort of come back here. To me, this one might have a breather, might have a consolidation there. The one that really interests me was MP1 Megaport. So again, this is sort of, you might sort of say this is sort of the tech sector for Australia here. So that's obviously had a pretty good update, traded in here, sort of cooled off again, held up here, but in a market which is pretty negative, undergoing a bit of a growth crunch, this is showing some relative strength in there. So this is a pullback here, like possible VCP setting up here as well. We've sort of had this leg down, another narrow leg down as well. Look at the volume through there, Chris, as well.
Yeah,
pretty light as well.
Days.
Yeah, so we've had a bit of a bounce here, not super volume here again, but this will be interesting to watch here over the next sort of 3 to 4 days. See what happens here. So this is the one that's sort of showing some relative strength there. And
what about the 50-day moving averages? How does that help play into it?
Yeah, look, it's not one that it sort of flashes back and through a few times there. So I look at the 50-day moving average a lot, but this one hasn't sort of respected it a lot of the time. But I just like to sort of see that's actually, it's like sort of consolidation here. So the 50-day moving average will end up being this sort of probably, if this drifts down here, this will end up being the shoulder here, what I call my little B wave. And then so it actually, just like pulled back into here, and then it pops through the B wave. That'll be a bit close. That'll be, if it does do that, it'll break that lower high, and it'll probably break above the 50-day moving average. So basically, a close back above that 50 after a little VCP here would be the perfect setup if it does set up, So that's sort of something to watch here. So that was pretty interesting there. I mean, the other one that's held up pretty well is 360 as well. So similar sort of chart here. Look how tight that is. That's pretty nice move here. And this is sort of largely gone sort of sideways in here so far. So again, not too much volume in these declines in here. Pretty light all the way through here. Some okay volume, some good volume all the way through up here. So again, this is another one just to keep an eye on. And this is sort of the, if we think about, I remember there was an old sort of, I read this book there once called back the fold back technique, and it's like a double bottom or a head and shoulders there. Basically, so there's a point in the chart there where it'll mirror how it traded into that position, that point. It'll trade out exactly the same way. So if you look at that 29th of June, how it traded into that point, it's traded out the same. So that sort of lower high, this lower high in here, traded out to the same level here as well, and then sort of congested back, and then it's gone back up to around the same high previously, congested back, gone back for another retest again. So this suggests we might weaken off back into this sort of range in here, and then go. And that's just the interesting theory. And I read this book about this fallback technique, and I just initially I sort of laughed at it, but then but then I just started seeing it. Charts just started, so I know some technical patterns like head and shoulders and double tops. I mean, double tops is actually one of the worst trading records in terms of this. It's got one of the highest failure rates of any pattern. So it's not the best pattern there, but I have noticed this fallback technique is sort of see you'll see sometimes stocks will trade into a point and they trade out exactly the way they've traded, you know, how they traded into that point there. It was just something, it was an observation I've seen over the years, and it's just, since reading that book, it just horrified me how often that actually really occurred. And
so your line of symmetry is kind of the low, is it? And then it's if we were to fold to the right of that line of symmetry, it's almost like it's doing what it did on the way in.
So this book and this sort of theory was that we'll fold back to, you know, similar round. It doesn't go exactly perfectly, but suggesting there we might come back into the 440, 450 zone there, and then start to work away. At some point, it stops following the technique, but oftentimes I start sort of seeing it trade out the same way it traded in that point. I thought, oh, that's interesting, and then it'll just tends to follow these sort of patterns all the time. I guess it makes sense because obviously these are sort of places where people got in, so all of a sudden if they get back to the square, they probably start to get out of there. So it's just a really interesting sort of theory, and as I say, it's just one that I, again, initially sort of dismissed, but over the years I've just found it just happens over and over again, very, very similar. GL1 was on our list there, but that's now a bit of a concern here because it's sort of gone to a slight new high and then sort of failed here. So not super selling in there, but just the fact we've gone to a new mark. I mean, this is sort of, you know, beautiful sort of pattern there, and then a nice break here. A little bit, sometimes you see those big volume days at the high, they're big wide ranges. Those should sort of scare you a little bit when you sort of see the, you know, those bigger days there. Do you know what I mean? See how they can sort of be exhaustive type of behavior there when you see the wide range. Those are sort of days where Minervini would be suggesting you take some off. When you see that stock's been running and then it has a big wide range day and big volume. This was pretty interesting stock here, new Energy Solar, NEW, some pretty interesting volumes through there. So this is sort of one that actually I sort of circled here and put on my list here, because I thought, wow, this is some pretty good volumes there, pretty interesting segment as well, and this thing's gotten active here. So actually, the volumes are up, you know, quite a bit here. So this is definitely a stock to put on the radar. A little bit stretched here, so maybe you just got to wait for some sort of pullback, some consolidation there, but does look like an interesting stock. Some big volumes starting to come in there, which is tail of the tape, as they say. So that looks pretty good. So that is one to keep on our list. So that's our sort of quarterly sort of stocks there. In terms of the weekly movers there, this is a bit sort of tougher there. I think Cogstate was number 2. I think MGA was number 1. So just again, getting these small stocks sort of popping here. So I think a lot of the top stocks were all sort of small ones that are all popped here. So again, look how hard it is to sort of trade those. The only one I saw in there was SSR Mining, which is a silver stock there. So I'm starting to see a bit of volume down here. A couple of high lows sort of building in there. So definitely one to keep an eye on there. I see gold and silver, you know, potential safety trade there in the sort of market there. But it's funny how, you know, this gold and silver have just tended to follow the market lower here. So there hasn't been that sort of flight to safety there yet. There, VHT was one that's had a little bit of a pop there, pretty light volume there, so not too much going on there. I think Metal X there. Another thing I sort of noticed here was that this has had a big correction there. Volumes are sort of up here, so that's interesting here. You're starting to see bigger volumes down here, so possible signs of accumulation there, but no signs of any sort of great price action there just yet. VR1, which is kind of interesting to me because obviously this has had a nice little bounce in here, and then this is a really, you know, it's a bit of a long-serving consolidation. The only thing I like about this is it's, you know, 6 cents. It's pretty small, and you know, my view is there's going to be plenty of trades coming up here. So why sort of go to the bottom of the barrel when, you know, there's going to be some great trades here in the next week or two if we see some deeper lows there. KCN's pretty interesting. Possible little BCP here so far. Sort of this has gone back above previous high there, so it's a bit of a sideways move, starting to build a few high lows in there. Each pullback getting sort of smaller here. Volumes are a little light there, but that's sort of interesting without being earth-shattering. And AX1 was the only one in there I sort of thought was had a little bit of a move off the low there, but again, pretty tricky as well. Nothing too much going on there. Just, yeah, so the weekly list was a bit of a tough list there. There wasn't too much in there really jumping out. But that should be the case there, Chris. It should be. Yeah, it should be sort of slim pickings if we're basically in a pretty bearish phase, and if we are sort of getting towards the end of that bearish phase, which I think we are, we might just be in the last sort of final throws, or when things get a bit ugly, a bit interesting here. So, but yeah, the only thing I sort of took from the list really this week is that there's a few. I mean, I've had retailers in the quarterly list; they've had a good run, but some of the tech stocks have actually held on pretty well here. And even the other day, if you remember when the market was off 100 points the other day, best performing sector on that day was the technology index as well. So starting to see some money come in for some of the sort of tech sector here. So if you follow my weekly reports, there are sort of my cycles are sort of suggesting that commodities have turned last in the cycle, which is sort of the normal business cycle. So normally bonds go first, equities go second, and then commodities go third. So I think commodities are going to lag here. So I think the things like technology and the US market is going to bounce first. And I think Aussie market in these sort of similar cycle, we've sort of lagged. We've normally sort of found a low like a month or a couple of months later. So I think potentially commodity stocks might drag our index down a bit lower here. So I just think it's maybe looking at things. I mean, I know things like car sales have held on really well. So I had a bit of a bounce there, but that's holding up pretty nicely considering the state of the market there. So just some interesting stocks here. So I've been sort of circling a lot of the tech stocks. So MP1, 360, car sales. There's a few stocks in that sort of sector there that have held up pretty well here. So that's probably the thing I took the most from the list there. So it'll be interesting to see how they all hold up here in the next week or so. But yeah, I think things are about to get a lot more interesting probably in the next few weeks.
That's a good takeaway and a good summary of the business cycle. So with that insight, it's probably worth just wrapping. You've done this for quite some time. You've trying to find opportunities in markets. Are you finding some sort of confidence in the fact that the timing in the reports that you're getting on your Tuesday report that you send out each week, and the fact that we're looking and trying to scan opportunities in the market and we're coming up quite skint? There's just these small caps that are flicking around.
Yeah.
Is that the two of them happening at the same time? Is that kind of giving you confidence that the cycle is possibly nearing an end and there is more opportunity ahead?
Yeah, definitely. Look, all the pieces are all just sort of coming together. And it's bizarre, actually, that because I look at the 60-year and the 10 and 20-year cycles. So I look at all the sort of similar cycles and overlay them there. And I normally have all the charts up there, and I just sort of skip through them all. At the moment, there we're following the 2002 move almost identically. And I was looking at the charts there yesterday again because I just sort of keep recapping there, just sort of looking through them, and even the timings and the length of how many days down and the counter moves and then the dates and stuff there are just really close, to the point where like yesterday the market jumped up. We're up 100 points yesterday, big moves there. So we saw two things. I saw there yesterday was that big move, which was very, very similar to what happened in the past, and my charts were basically telling me, okay, this is going to get near the last low, we'll try and consolidate for a couple of days, try and bounce there, kind of, I guess, almost a trap, bring everyone in, and then we'll turn down and then finish off the last leg. And that's what all the previous cycles were telling me yesterday. Now, I like to sort of trade, so I was like, I was looking for that bounce to sort of trade there, but I don't just go and trade it blindly. I wanted to sort of make sure the volumes weren't there as well, Chris, yesterday. So the one thing I sort of noticed with our market yesterday, our market was up on pretty light volume yesterday, and that US market, the volumes were pretty light as well the other day on the big bounce. Now on the Dow, that was like a 700-point range. So if you read Wyckoff, so Wyckoff Theory basically says, you can have sort of small volume days and big volume days, but if you've got a big wide range day where you're cutting through like the Dow's cutting through 700 points of range, there should be a lot of buy and sell orders through that range. So the volume should be up. That's, if you get a short range where you don't trade much, then you can have low volume. Big range, you should have big volume. So if you have a big range day and you don't have big volume, that's not positive. So the volume.
So is that the anomaly he talks about? You had a big return for not a lot of effort.
Yeah. So I mean, yesterday I was looking for a bounce in the market, and I'm also looking to make sure that there's no conviction in that buying as well. Make sure the volumes are sort of low, and so that the cycles. I don't know. I've been following cycles a long time. This one's, was sort of up there with the 07, 09, the commodity cycle that went through that period there was just bang on, in month by month. But this one is just, it's all the cycles are all in agreement this year, and so they're all sort of pointing down here. So I mean, yesterday I was able to add to my, put some more B-bars on, put some more snares on. I even, because I'm sort of negative commodities, I even got a short. I put on some puts on one of the commodities, so I just added to my positives. So so I went from sort of being pretty light on to just adding back on. So I mean, I'm hoping here now we'll just get a bit more of a move down next 4 or 5 days into the end of next week. That's sort of what I'm hoping for. I'll use stops here. So again, not important to be right. Just look for those signs there. Try and trade them there. Just manage your risk. Sort of get I guess it's funny with all these sort of all the funny comments on Twitter over the Whitehaven. It's like it's just kind of made me sort of think. It's like I spent a decade letting my ego get in the way of trading, and as traders, it's sometimes it's not important to be right. It is really not important. It's just way more important to not lose money when you're wrong. So that's probably the best advice I can give any trader is just accept. I mean, I'm wrong every week. I have losing trades every week, but I have to live by the adage. I've eat like an elephant and shit like a bird. That's right. That's right in front of me as I stand here right now. It's on the board right in front of me, and that's the way I've got to trade. So if I'm wrong, I have to lose small. So it's okay to be wrong. You're going to be wrong if you're a trader. It's a numbers game here. You're going to be wrong, but just manage the risk. Keep it small. So all the good trade. If you keep, if you listen to trading podcasts, you read trading books, all the successful traders say exactly the same thing. So just focus on those actions there. It's really not important to be right or wrong. It's more important to make money. And when you lose money, that you lose small. So if you're right, you got to win big. If you lose small. If you get a model around that, that's the way to go. I heard during the week, actually, I heard a few things on some guys on AusBiz, and they interviewed different analysts on there. One of the guys was saying you can't go broke taking a profit. Well, you know what? You actually can. Because if your losses are double your wins, you can go broke, particularly if your win ratio is sort of, even if you've got a win ratio around 60%, you still lose if your losses are double your wins. If your losses are the same as your wins, then you need to be up around 50%. So, I mean, most traders, the win ratio is at best around 40%. I mean, 45% might be the winning, there might be the best traders up around that ratio there. So you need a model there to I guess to go around that. So except you won't be right all the time. What's most important is just to contain those losses, and if you're going to be wrong, just lose small.
That's really good info. We might wrap on that, because that's a great chestnut to take into the long weekend. So thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
And if you want to see Gary's Tuesday reports, you can click on the right-hand side to see what he's talking about with the cycles and so forth. And he's mentioned the volatility contraction pattern twice in this recording today. So that's also on the right-hand side, an in-depth review on Mark Minervini's volatility contraction pattern.